Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A counter-to-the-counter bullish engulfing pattern yesterday, if only just, after the previous session's immediate countering bearish double. Prices moved back up away from the purple lower time, currently at 110.14, and more towards the middle time above, currently 111.56, the late June to very early August bullish Andrews pitchfork. Further down we have the bright red slowly declining head and shoulders neckline extension of the July 2017 to November 2018 move, currently at 109.90, whilst above we have the combined congestion from the March 2020 from March 2020 as well as the December 2023 high, both at 111.39, and also the declining dark blue neckline extension currently at 111.67 of the January to February 2021 reverse head and shoulders pattern. Now, so far today, a small follow-on high, cautiously pushing up over yesterday's high at the moment. Cable, aka sterling against the US dollar. A counter-to-counter bullish harami yesterday after the previous session's immediate countering bearish opening black Mariboso and bearish engulfing pattern. Despite the reactionary move higher, prices only pierced the dark blue middle time, currently at 131.66 of the bullish Andrews pitchfork for the late June to early August move, closing on the July 2023 high at 131.43 and over the December 2020 low at 131.33. The former, I suspect, is a derivation of the latter. We have the beginnings of an August to date based bear channel in the offing, currently at 130.29 to 131.59. Beyond the dark blue middle time, we have only very recent congestion until the high at 132.67 that was made last month. Below the December 2020 low, we are fairly clear until the July high at 130.44. Now, so far today, a small follow-on high up through the July 2023 high and testing the nascent and very recent upper bear channel line. Euro sterling. A bullish white soldier yesterday after 3 consecutive indecisive patterns in a row. However, it was also a follow-on high to the previous session's key reversal up. Yes, I know an indecisive pattern, but it was also a key reversal up. Well, sometimes this sort of thing happens. Support is below at the congestion at 84.05, dating from August 2022, with further congestion below from the same period at 83.86. Which was responsible actually that low for July's low at 83.81. Meanwhile, overhead the market pierced but was still capped on a closing basis by the lower trend line, currently at 84.25, of the broken August-based acutely descending wedge pattern. That's further up though, we have the April 2021 low at 84.70 and the flatlining green short medium moving average currently at 84.67. So I'd previously laid out some potential targets for a move below this August-based descending wedge pattern. The primary target 84.37 was reached last week, but we still have the secondary harder to reach target X1 down at 83.34. Overall, prices have stopped moving lower within this large June to July sticky congestion zone between roughly the April 2021 low at 84.70 all the way down to the 2024 low in July at 83.81. And instead seem to be going sideways with some potential to recovering a little bit higher. This zone is not specifically defined, so if prices do move, well, you may find some places with little or no support or resistance and others with a lot. Now, so far today, a push up through the lower trend line of the broken August-based descending wedge pattern, but it has been done cautiously. US dollar against the Japanese yen. A second bearish Black Crow and bearish closing Black Mariposa yesterday after the previous session's key reversal down. This time, prices dropped down below the 50% Fibonacci line, the January 2023 to January 2024 move at 144.58, which the market had used as a base last week. The market finally halted just short of the untested dark blue lower time, currently at 143.45, of the December 23 to early August 2024 bullish Andrews Fitch Hawk. Now, I continue to ponder as to whether this market has maybe reached a decision time. My initial thought a few days ago had been yes, then we saw some indecisions, but perhaps now yes again. So far today, a further follow-on lower, down through the dark blue lower time, though as yet not stabilizing below it. An interesting feature is that we are now set up for a possible weekly key reversal down. So if we close tomorrow, that is Friday night, below 144.37, then we'd be on. Anything in between 144.37 to 146.16 would make it a lesser outside week, and anything over 146.16 would be a weekly key reversal up. US dollar against the CNH, the offshore Chinese yuan. A reactionary bearish Black Crow yesterday after the previous session's second bullish white soldier. Prices dropped back and closed below the lesser Fibonacci line at 711.61. My major feature on my daily chart has been the finessing of the August-based descending wedge pattern into an August-based bear channel. Currently that's 705.26 to 712.22. This was something I was contemplating yesterday and mentioned it in my commentary. Looking below, we have the recent low at 707.01. That is just ahead of the June 2023 low at 706.57. But in between, not much. Meanwhile, overhead, we have the lesser Fibonacci line at 716.22, but not much in between bar the upper channel line and what prices have generated in August. Now, so far today, a slightly higher open, but then a move lower from the open, though reacting back upwards when the move down seemingly met as expected, no significant supports. US dollar against the Mexican peso. A bullish white soldier yesterday, making a new high close, one not seen since October 2022. Prices once again pierced the considerable overhead congestion band between 1987.56 to 1991.31, containing the December 2022 high at 1991.31, but this time closing over it. The base of the action was on the bright red middle time, currently at 1970.77 of the mid-May to mid-July bullish shift pitch hawk. I yesterday drew a new dark blue highlighted, very acute, early July to mid-August bullish Andrews pitch hawk that showed a very recent bullish angle of attack. Right now, prices are still close to the lower time, currently at 1968.10. Overhead, we have the late July high at 2004.30, which this market has been summing up the energy to tackle. Beyond this is the October 2022 high at 2017.20, and then relatively little until the September 2022 high at 2057.65. There is still a question outstanding as to whether the mid-July today action is a bullish halfway hesitation or a double top. Now, so far today, markets capitalizing on the close over the 1987.56 to 1991.31 congestion and using it as a base for a slow attempt higher at the moment.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.